All right, what's good, everyone? It's Fearing. It's currently August 2nd, 2025. I'm here to give you guys the video on the introduction to my model. This is a four-part series. So this is video 1 of 4. So before you can even move on, you have to first have watched all the WAP videos. These 4 videos will come at the bottom of the WAP series. So if you followed the rules, you went from top to bottom, you should have already watched them. On top of that, you should have, before even the WAP videos, have gone through these 4 channels underneath this category, how to implement quarterly theory. So these channels teach you how we implement quarterly theory within Power 3 and Mark Make models. So make sure you've gone through those and all the WAP videos before you move on, because if you do not, obviously you'll be able to get a grasp of my model, but you will not have the same precision if you're not incorporating quarterly theory. What is the overall overview of my model? Well, as you guys know, I had 2 previous models, the 30-minute Power 3 and the 4-hour Power 3. I still use a very similar framework to those models, but I simply add a new layer of precision by incorporating quarterly theory. So this model is most closely related to the 30-minute Power 3 model. And as you guys know, we're looking at turtle soup, the 8 a.m. and the 9 a.m. low or high. However, I find that turtle souping, trying to trade off standard deviation, all of that, it lacks precision. You see a bottom or top tick, you think that's precision. It is not, because you are simply gambling based off probabilities that price is going to, reverse off that higher low or reverse off that standard deviation. It's gambling based off of probabilities, and I'm not interested in that. I want to trade based off certainty and confirmation. And that is why now, by utilizing quarterly theory confluences, I can pinpoint reversals by then entering off of lower time frame CISDs instead of trying to gamble, highs or lows or whatnot. By utilizing quarterly theory confluences, then entering off lower time frame CISDs, I then get a precise framework that I can enter off of. Now, when it comes to the risk reward, we can see anywhere from a 1 to 3 to a 1 to 10 to 1 to 11, 1 to 12. One of the trades I'll be covering was a 1 to 11, 1 to 12, something of the sorts. The average risk reward is probably around a 1 to 4. So why does it differ so much? Because I don't care about risk reward. So for reference, I rarely take a trade that's under 1 to 3, but what I'm not trying to do is increase my risk reward. I don't care. The risk reward can get so high because it's entirely based off of our stop loss and where our TP is. What I mean by that is our stop loss is always going to be protected. It's always going to be placed at a protected higher low. If the lower time frame CISD is like 5 points away from the protected higher low, then that gives us a very tight stop loss, and that is still a protected higher low. Sometimes it's going to be 5 points, 10 points, 25 points, 30 points. I really don't look to take trades if the stop loss is over 30 points. But if the TP is, great enough, if it's, large enough, then okay, sure, I'll validate it. But it depends entirely as to where our protected stop loss is and to where drawn liquidity is. So one of the trades I'm going to be referencing was this trade where my stop loss was only 7 points, but my TP was about 87, I think, 84. And that's what it can look like. It's like I'm following my plan. I entered off a lower time frame CSD, stop loss at the high. That's just what the market gave us. And it's going to differ setup to setup, but that is just how, that's how the risk reward differs so greatly. And when it comes to morning rate, unfortunately, I have not done an in-depth documentation of it just yet, but on average, I would say it's around a 70 to 75% win rate, just based off of my live account statistics and my funded account statistics. The only issue that I don't know for sure is because initially on my live account, I was not completely incorporating quarterly theory, so the statistics are not, it's probably even higher, I'll be completely honest. But in 2026, I'll be building a track record so we can properly get these statistics and actually have that data. So what should you expect when it comes to this model? Well, this model should not be traded on a live, funded, or evaluation until you have at least 1 month of data collected. That is assuming that you have already experienced ICT, Power 3, and Market Make models. If you have very little experience with that, minimum of 3 months, bare minimum of 3 months. But if you do have a good a good experience with ICT and specifically Power 3 market maker models, then just 1 month will do. But it should not be, 1 month of data immediately on a live. No, it should be 1 month of data. You move on to an evaluation account. You pass that evaluation onto a funded, and obviously the next steps. Then, of course, during that data collection phase, this is what you want to, track data on. You want to track everything in terms of the confluences. So it will look something like this. And we'll reference my most recent chart review. So I track this all in my chart review channels and my for your wins, losses, and for your trade reviews. It's going to look something like this. You want to do a general top-down analysis. So obviously the top-down analysis you do is going to be based off of the sequential SMT that we have. So in this circumstance, we had weekly cycle sequential, so 1 hour time frame. You do your analysis on there, drop down 15-minute time frame because we have daily cycle, do your analysis on there, 5-minute because we have 90-minute, and so on and so on, and then 1-minute execution. Just reference these channels when you're collecting data, and that is essentially how I want you guys to collect data. So from there, you should also be taking note of stuff like the day of the execution. Is it Monday, Tuesday, Wednesday, Thursday, Friday? Or the time of the day? Is it the first 30 minutes? Is it within the 30-minute Power 3 period? Within the 4 Power 3 period? What is most effective for you? And then, of course, when it comes to top-down analysis, you should be understanding higher time frame narrative, the risk reward, win rate, and all that. Now, you have to commit to the process. Like we were talking about earlier, you cannot rush it. You cannot rush onto a funded or a live or even an evaluation. You have to do your data collection. Even if you feel ready, within the first week or two, you have to give yourself more time, because here impatience will work against you and you will lose a lot more money than you were likely willing to. So we showed this earlier, but this is an example of my trade. We cover this and it's in video format. You can go back to July 21st, 2025 for the daily review / trade review channel and go watch a video on this. But in this circumstance, I was entering off of a 1-minute CISD, and I'll quickly show that. So going back to July 21st, 2025, here we are. So as you can see within our weekly Power 3, it's a Monday. As you can see, we open up and immediately expand higher. Why is that significant? Well, it's significant due to the fact that there's no sequential SMT attached to our low week. So immediately due to that, even if we are going to be bullish on the week, we understand that first there has to be some sort of sequential SMT beneath or at least at our current low week. Due to the fact that there isn't, this entire expansion higher can be classified as manipulation, and that manipulation is then confirmed by having weekly cycle sequential SMT at the highs. And then we also had daily cycle sequential, 90-minute sequential, and then of course microcycle sequential. From there, we also had we'll quickly break it down in a very simple format. Then on top of that, we had daily cycle sequential, so we can validate a 15-minute. As we can see right here, we had a 15-minute, go in replay mode. We had back-to-back 15-minute swing divergences. Then I simply entered off of the 1-minute CISD. Again, I'm not covering this in too much depth. I'm just giving you guys a quick introduction to my model. Stop loss at the protected high, which is the high that price is forming daily cycle, and 90-minute sequential SMT with stop loss there. And TP, even though we're anticipating a new low week, we want to be reasonable intraday, and we're targeting EQ of the range, because again, even though we're anticipating a new low week, we still have clear internal structure that we can play based off of, and we had an unbalanced range below us. So EQ of the range here is a clear drawn liquidity, and when it comes to narrative and drawn liquidity, there's going to be videos on that, so that's why I'm not going into too much depth right now. I'll go more in depth in those videos, but this again is just an introduction. But for this trade, it was a 1-to-11.2 risk reward, and ultimately I had swung this into the next day and ultimately played out completely. So that is a introduction to my model. We'll go over one more trade where we had very similar stuff. All of the confluences are listed here, and I went in depth in video format for July 29th, 2025. So you can go back to this day in the server and go watch the trade review for this channel. But as you can see, this is overall what it looks like. We're entering off lower time frame CISDs based off of higher time frame narrative, having a clear drawn liquidity, and the proper QT confluences. This circumstance, higher time frame narrative was bullish. However, lower time frame narrative was short-term bearish because we had an unbalanced range below us. As you can see here, mindset of lower before higher, as I posted in my pre-market analysis, We had weekly cycle, daily cycle, 90-minute sequential at the highs, while having a clear general liquidity at EQ of the weekly range, because EQ of the weekly range for this day was, and I'll quickly show it, July 29th. Go back to this day. As we can see right here, we had a clear general liquidity below us because EQ of the weekly range was unbalanced. On top of that, we had clear general liquidity at the previous day low. So the mindset, as I posted in my pre-market analysis, was that YM would draw to the previous day low, as not a single index had rented out before expanding higher overnight. And as we can see, we had an unbalanced range below us. And the same logic that we talked about earlier with the fact that we had no sequential SMT at our low week is the same thing here. And Q had no sequential SMT beneath our low week due to that, and no manipulation beneath our low week. So we had a clear daily devil's mark, a clear bearish narrative. So the mindset of lower before higher. Reason being is because higher time frame narrative is bullish. However, in order to continue the higher time frame narrative, we first have to drop on a lower time frame, rebalance range, run out the previous day low, form bullish sequential SMT before we can validate continuation higher. Obviously, I went in a lot more depth in the daily review for this video, but again, this is just an introduction. Hope you guys enjoy, and I'll see you guys all in the next video, which will be the checklist for my model.